Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities. Opinions and statements of guests not affiliated with EverAg are their own and do not reflect the views of EverAg. The accuracy of their statements cannot be guaranteed by EverAg.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago on a lovely Thursday morning. Joining me today, as always, from Kansas, Director of Feed Procurement, Mr. Jake Kingsley. And joining us today for his first appearance on the Grain Feed from New Jersey, Senior Analyst of Grains and Oilseeds at Argus, Mr. Eduardo Gonzalez. Team, how are we today?
Doing very well this morning, Jim. How are you?
Doing excellent. Eduardo, how are things out east?
Doing okay. Looking forward to the long weekend.
Yeah, that's right. We do have a long weekend approaching. I have to keep reminding myself of that, but it's not just office is closed, school's closed as well. So relaxing might not be the theme, but it's still nice to take a break and especially remember why we have this holiday. So looking forward to that. Eduardo, before we get going here, would you mind telling the viewers and listeners just a little bit about yourself and your work at Argus?
Sure. I've been in the industry for 20 plus years covering agriculture. Right now at Argus, I'm covering U.S. ags, so, corn, soy, wheat. But at the same time, I cover Argentina as well. And in Argentina, it's corn, wheat, barley, malting barley, which is fun, and some soybean meal. And for the most part, it's talking to the different producers, users, some of the physical traders, and, trying to get a sense of what's happening in the market. And at the same time, obviously doing the analysis.
Okay, excellent. Well, very appreciative that you are here today, Eduardo. We've got a lot to run through and are very, very curious to hear what you have to say about what is happening with our friends down in Argentina at the moment. But first, Lexi, if you would kindly timestamp the broadcast, it is Thursday morning. It's about 10:30 Chicago time. Just a quick look at the grain and feed markets. We do have corn trying to trade just a smidgen higher here this morning. We have December futures up about 3 cents. They're trading just under $3.94 this morning. So we did start off the week on the lows, coming down to $3.85 for December corn futures, but we've rebounded slightly, so not back up to $4, but in that $3.90-ish type of range so far as we approach the end of this trading month tomorrow and that 3-day weekend we were referring to before. We have November beans back up again this morning, around $9.85 for Novi futures. And then December meal, soybean meal, that stubborn little byproduct, it has been hovering back around $310 per ton. That's up about $3 on the day, just over $3.11 at the moment. So not quite as close to that 300 even mark that we've all been hoping for. But we did trade there for a minute or so here in the past couple weeks. But we're keeping a close eye on that stubborn byproduct. So there's a lot happening in the grain and feed markets here as of late. Maybe not necessarily price action, but there's been things happening across both the U.S. that we've been focusing on. Of course, the industry has been mostly focused on the U.S. harvest to see what those final yields will ultimately look like as the combines are running here in the next, really 4 to 6 weeks, depending on where you are in the U.S. We've got silage chopping happening rapidly here and slowly making its way up towards the north. Labor Day is often that psychological timeline to start getting that process done. So it's always an exciting time. But as we are harvesting here in the U.S., we have to keep in mind what our friends way down south in South America are up to at this time of year, because as we harvest, they are looking to plant. And a lot of the things that we, Jake, have been telling some of the folks that we work with is that, we're talking about this downside movement in corn and in meal and other products that we're feeding our cows and piggies. We're talking about that downside potential and what that downside potential might look like. And we do keep our friends in South America on the back burner because now they are focused on what they are going to be planting. So, Eduardo, if we could turn to you with some of your expertise on what's happening way down south, what's concerning our friends down in South America these days as they get ready to plant?
Sure. I mean, down in South America, again, in this case, I'm speaking about Argentina. Well, I think every farmer is concerned with prices, obviously. But in Argentina, the one thing they have is corn planting will begin in about a couple of weeks, like mid-September or so. And already some estimates have come out locally from the Buenos Aires Grain Exchange. They're projecting 6.4 million hectares of corn to be planted, which is in line with the USDA estimates. But again, talking to the producers down there, to some of the farmers, a lot of them are saying it actually might be less than that. It might be closer to 6 million hectares or even a little bit less. And if we see 6 million hectares planted, again, assuming normal yields, that could be a cut in production or a decrease in production of about 3.2 million tons out of Argentina. So instead of them producing the 51 million tons that they're projected, it would be closer to 47 million tons. And one of the big issues for the farmers down there is last year they had the corn stunt disease. They had the leafhopper spreading corn stunt disease like crazy. And a lot of them are very risk averse right now. They do not want to plant because they're worried that it's going to happen again. The other thing too down there is the soil moisture. So at the beginning of the year, if everyone remembers, it's winter down there where it's our summer here. But at the beginning of the year, when they planted their wheat, they had pretty good rains. The soil was, soil moisture was great. And they actually planted more wheat than people anticipated. This time around now, what's happening is kind of the reverse. They still haven't had rains. And if they don't get rains within the next several weeks, the soil moisture will not be adequate, which again will be another factor for them not to plant corn, or again, to decrease the acreage for corn. So it'll be interesting to watch. It's been pretty interesting covering Argentina, talking to the producers down there. I know they've also had the strikes. The oilseed workers went on strike several times. Right now, they're at a 15-day kind of cooling off period. That 15 days, I think, comes up sometime next week in the first week of September. And right now, the issue is wages. So the ag industry proposed, I think it was a roughly 10% increase in wages. The oilseed workers want more. Again, one of the issues in Argentina has been inflation. I mean, we think we have inflation. They were running at 120% inflation for the year, which is beyond crazy for me. So that's been one of the other issues down there, where if they have the strike again, it'll shut down for the most part a lot of the ports more upriver. It'll stop soybeans. It'll stop soybean meal exports, and it'll slow down kind of the ports and shut everything down, which is kind of what happened a couple of weeks ago. So down in Argentina, it's an interesting time. Like you mentioned, we know kind of already what's happening in the US, but the next month or so will definitely be interesting to see what happens down there.
Absolutely. So focusing on corn especially, right? I mean, compared to what the folks in Argentina had the previous 2+ years, this past year, in terms of their production, was actually a fairly nice rebound in terms of total production. But like you said, there's still concerns over maybe a repeat in some of the quality issues that they had in their last crop. But also, a lot of the talk of why prices had been supported just globally over the previous 2 to 3 years. Argentine weather was a big factor, right? They went through a pretty severe dryness spell for, 2+ years. Really hurt overall production. I think folks have kind of then just removed that storyline because they ultimately rebounded in the eyes of the industry this past season. But as you've noted, I think it's important to keep in mind, all we've done is talk about how wonderful, for the most part, how wonderful weather has been here in the States for this year's crop. But the folks in Argentina, we're a few weeks out from planting, as you stated, and we're already a little worried about dryness levels and the lacking subsoil moisture as they head into corn planting. Do you think it's a real possibility that folks, if they don't get those rains in the coming weeks, they make a strong shift to soybean acreage instead of corn?
Yeah, so right. If they don't plant their corn, their odds are the majority of the acreage would shift to soybeans. The other thing that the guys down there seem a little worried about as well is we were in El Nino, and now we're going to be switching to La Nina. And if you recall the past couple of years, the way La Nina affects Argentina is with dryness, heat. A couple of years ago, it basically crippled the crop, right? It crippled the soybean crop, the corn crop. They were at all-time lows in terms of production. So that's also kind of something that's in the back of their mind, in that we might be entering a La Nina. And if it's a strong La Nina, that does not bode well for them either.
I think when Jake and I are speaking to our friends in the industry who are buying grain, I mean, lately we've been talking about, that downside potential, as we stated. Are things super supportive, super bullish in this market? Absolutely not. But how low can things actually go at this stage? And as we push through the U.S. harvest and then into the winter, I think this is one of those supportive enough factors to maybe not send prices to the moon, but it's something that maybe limits how low we push this year. Because if there are some serious issues way down south, that makes then maybe the U.S. crop not necessarily more attractive, but as the alternative that some of the, importing corn nations need to look towards as we move through the winter. And we've already seen a nice little uptick in demand and at least steady demand from the export market from a U.S. sales perspective. But then we're potentially then needing to plant more beans in Argentina. And as you stated, we're working through some bean issues right now there as well. The oilseed workers on strike, potentially impacting the ability to crush and or export some of those byproducts. Do you see that slowing down the Argentine crush industry significantly, or is maybe this more of a temporary hold up for the time being?
I mean, I guess it depends if they strike, how long the strike lasts. Obviously, when they go on strike, crushing goes to close to zero. So I think last time they went on strike for 4 or 5 days. I don't recall the numbers off the top of my head, but again, that's 4 or 5 days out of a month. You're going to be 20% less, more or less, right? In terms of your crushing. That is an issue that, again, depending on how long it happens. At the same time, for the government in Argentina, they need those dollars. So they need the industry to be functioning and to be exporting because they need the hard currency coming in, which is kind of why they stepped in and said, okay, 15-day cooling off period. Let's try and figure things out. This is not beneficial for anyone.
Right. One of the reasons we have to continue to focus on this here is because I think the global protein market has also been looking at a different part of the world for strikes. And that was our friends up in Canada on the rail strike scenario for more of a canola movement discussion, not necessarily production or crushing and processing. But it's important to keep in mind that, yes, we've brought board price December meal down towards $300. Are we super supportive or bullish bean meal? No. But maybe a few of the items preventing us from a real push back to and through $300 per ton are some of these items where you start to clog the potential production and movement of protein from various sources across the world. Again, people look back towards the U.S. and say, hey, well, we know they've got it. And as long as they're not having issues with it, it starts to support our market once again. So there are all these various factors that, again, maybe are not necessarily bullish, but that potentially limit our downside potential. So thank you very much, Eduardo, for those insights. I think that's probably a good transition then to Jake, what you are seeing here in the U.S. and how we are feeding our animals here stateside, because we've mentioned the protein concerns in various parts of the globe and those corn needs. But as we just focus in our bubble of the U.S., crop looks okay, right? So what has that been doing in terms of what you've seen on the cash side for our dairymen here in the U.S.?
So again, on the cash side, this week, markets have been relatively quiet. We're seeing pockets of the Midwest where basis values and overall cash prices are very attractive, reaching for the lower end of historical price ranges. And then you still have basis values out on the destination end of the rail lines, a little firmer than I think they could be by the time we get into harvest, as we hopefully realize these large crops we're anticipating here in the U.S. But again, futures are offering plenty of opportunity to manage some very nice prices relative to the last few years. I think everything you guys have just talked about here has been a very healthy discussion, a good reminder that we do trade in a global marketplace, and things looking rosy now doesn't necessarily mean that they will remain that way for the next 6 or 12 months. And that's why we've been talking about taking advantage of these opportunities we've had while they are here. And we can do it pretty cost effectively. So I think a lot of folks have done a good job of stepping in and doing that. It's just a good reminder that, 6 months down the road, we could see weather or disease pressure or any number of things kind of reshape the balance sheet. And again, I don't think we're talking about screaming back up to $5.50, $6 corn or $400 soybean meal futures anytime soon, but slow and steady, you can work your way that direction over time. So I think we had our crop tour go last week, and it looks like the corn crop kind of is what USDA numbers and what most of the market has been expecting it to be, or at least the data shows that it's going to be close to that. Soybean surveys are a little bit less reliable historically, but they do indicate a sizable crop is standing out there. We won't be able to confirm all of this until we're running combines through it, but we're not far from that either. So anticipating healthy balance sheets to come together here in the US, and then we'll focus our attention on South America pretty quickly after that. So looking for maybe another little seasonal break in basis and possibly futures as we ramp up harvest. I mean, we're just a few weeks away from really getting into it in some of the more important parts of the grain production areas here. Probably you catch a dip there at harvest. That's going to be possibly your last chance to take advantage of something like that for a little while, because we do have some carries in the market, and the farmer in the US will typically in that instance go and lock things away in the bin, and then it takes a little bit to get it out of there. So
good deal, Jake. Thank you for that. In terms of the cottonseed market, we've been fielding a lot of questions in terms of the condition of the U.S. cotton crop, and if that's more so seasonal declines, let's say, in those conditions, and how it might impact cottonseed pricing. Any commentary there?
yeah, so we had a very nice looking crop for, call it, the first half of the growing season. Most importantly, a very healthy rebound in production and crop conditions in Texas and Arizona and California, the western growing areas. And we have seen conditions decline over the last handful of weeks with some hot and dry weather. It's not unusual for it to deteriorate at this point in the year. We're looking at what is probably getting closer to kind of an average looking crop at this point, maybe just a splash under average, but still in Texas. And I think this is probably the most important region for driving price these last few years, certainly, and a rebound this year, is that Texas is probably getting closer to average on condition, which is tremendously better than what they had the last two growing seasons, where they harvested less than half of and close to only a quarter of their crop. Coming in at even 90% of normal would be a tremendous improvement. So I think we're getting a little less aggressive on what our price targets had been, but still looking for another little dip in price there. Again, it'll probably take getting into the harvest window and confirming what's out there before we see a price break, but I think there is potential for another little dip there.
Okay, excellent. Well, thank you for that, Jake. We've been fielding a lot of questions from folks on that particular crop, and so we've been keeping a sharp eye on that as well, because the talk of the town has been corn and beans, of course, and the Pro Farmer and other tours don't necessarily hit our friendly little cotton crop down south. It's still very important to keep an eye on it. So thank you for that. And really, gentlemen, thank you both for your insights today and for all your contributions. Eduardo, huge thanks to you for taking your time to join the show. Great to have you. Thanks for being here.
Thank you. Thank you for having me. Definitely a good time. And if you ever want me back, I'd be more than happy.
Excellent. We would love to have you. We appreciate that. We'd also like to thank Corey and the Everag Insights crew for their support. Thank you to Lexi for production magic, and thank you to the viewers for watching. The Grain Feed contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.